This roadshow is brought.
Good evening, ladies and gentlemen. Welcome to the Crompton Greaves Ltd. Analyst meet. Allow me to introduce the dignitaries on the dais. In the center, we have with us Mr. Laurent Demortier, CEO and Managing Director, Crompton Greaves Ltd. To his right, we have with us Mr. Madhav Acharya, Executive Vice President, Chief Financial Officer, and Chief Information Officer. And to the extreme right, we have Mr. J.G. Kulkarni, Executive Vice President and President, Power Business Unit. To the left of Mr. Demortier, we have Mr. Anil Raina, Executive Vice President and President, Industrial Business Unit. And to the extreme left, we have Mr. Ash Gupta, Executive Vice President and President, Consumer Business Unit. I would now like to invite Mr. Demortier to begin with the presentation.
Okay, good evening. Apologize for some of the delay, but I think some people might be stuck in entering in Bandra. So, good night. I just want to go for the result quickly for you. I think altogether, our results were in line with what we were expecting. They are not great. Maybe they are not as what you expect, but I think that were what we are expecting. We have been a little bit surprised by the slowdown of the Indian market on the second half, which I think was not expected at that level, which affected both our industrial and our consumer business. I think for the rest, I think we have been following our plan. If I look at the growth, so for the quarter and for the year, we had the 11% growth, which was again in line with what we were expecting. We have been doing more growth than expecting, you will see, on the power product business, mainly by the restart of our operations outside India. And we did less on the system business, and here is mainly due to some careful selection you will see on the order. The other level, I think, for this year, I didn't put it. The UEOB, we have a higher UEOB than last year, so we have a very healthy backlog altogether. The order level was almost at the same level than last year, slightly down, but mainly due to the system business that was half of what we did last year. So it's not a bad news. I think it's more a good news because this is the highly selection of what we did, and I can explain that a little bit later. In terms of P&L consolidated, so I think I'm sure you will have a lot of questions about our PAT, but I think the volume 11%, the volume was mainly due to the operation or the turn in operation that we have made, mainly you will see in our power product business. The profitability is again in line with our plan of progress, and it has been mainly driven by the better performance of our outside India operation. India operation doing good, but I would say as usual, I think there not a slight improvement for Monsieur Ash Gupta that makes more profit, but otherwise we were mainly driven by our international business. The PAT, maybe Madame will comment, but I think we had some significant over income on this year, especially this quarter. And so which have enable us to give for the year. This is the result for the year. So 11% also on the top line, margin in line. The margin last year I put here 491 crores was before we do the exceptional restructuring. We had 112 crores exceptional last year. So if you want to see the what we reported last year, you need to remove from 491 crores, 112 crores. And this year, compared to that, we made 692 crores. EBIT 591, as I said, our PAT at EBIT, our PAT at 244 crores. So we can discuss more a little bit after that the tax and the over. Now, in terms of business, now the power business, as I said, has been driving our growth 21%, which is mainly due to the turnaround of our operations in our international business. And then we have the EBIT that goes with this increased volume in our power transformer business. The consumer business didn't grow. I would say, we'll give you those two highlights here. But we got a significant margin improvement, 12.1. The reason is relatively simple. It's a mixed issue. We got very good growth both in the fan business. We grow by 15%, and the lighting business, which is, as you know, these are our two largest business. We grow at 18% for the year. This is the quarter, so I will maybe. But I think the Q4 has been mute in terms of growth, mainly in the appliances business, which I think is the area where we have better added value. As we know, it's a pure trading business. So I think that's what explains that we have been also able to deliver better margin on this business. Industrial business is the one which has been the most impacted, I think, this year. This is an area where we have invested a lot, where we were expecting some significant growth both in the railway and in the industrial segment. And these are the two segments that in the last 2 quarters have been very muted, but I also believe that's the segment that will rebound the fastest once India is back on track. So I think by 4th quarter this year we should see quite significant improvement here. I think in a consolidated standway you see the same trend. So power business up now 16%, EBIT margin 2.8 because we still, at least we had a better 4th quarter than the quarter before. Consumer 10% for the year. Overall is not a bad performance, and again with a Q4 at 0 and higher margin. But I think it shows that at least we made the right choice on our cost structure in order to expand the business. Industrial business almost flat compared to last year. Again, big disappointment for us because we have a brand new factory. As we know, we have almost double our capacity, especially in Bhopal, with a capacity of 250 motors down there, and the factory is half empty. So, and we start to pay also to amortize the capex we have put in the last 2 years. So I think it's just a good factory waiting for good news, and I'm sure it's going to come in the years to come. If you take the orders, an interesting thing about the orders growth, what I wanted to show here is that our orders growth has been all across the world. So it means that all the assets we have all over the world have been able to perform well. Asia Pacific, I will start, we get more than 20% growth. As you remember, we put brand new factory there. We had some hard time to put it working, and that was last year. And I think this year now, the full year, it's plus 20%, so things are running pretty smoothly now. I think we have a lot of expectation on the Indonesian market, but also Malaysia, Australia and New Zealand. India has been flat, so here we need to be a little bit careful. In fact, we get a significant increase in our power product business and a decrease in our system business. So I think it looks like flat, but in fact it has been growing in the right segment for us. So I think it's also, that's why we got a larger EOB. In Europe, and Europe has been a good news. Europe is back on track. As you remember, this is where we put all the restructuring, but we're able to ensure a 17% growth this year, and mainly in the power product business. America also is a little bit back. Even Canada is a little bit back with some nice order, and I think so I think it's really good news for this. Middle East, it's not a growth compared to last year. But I think it's growth. We are constantly grow. Last year we had exceptional order in Iraq, very large order, so we were not able to replicate Iraq. We have to deliver right now Iraq. But I think it's a continuous growth, and we have a higher penetration. We make a lot of investment in our go-to-market strategy and our sales strategy. If I want the key highlights, I think you have a very nice picture about UHV Lab. I think it's 1600 kV. For those who have seen it, I think they know it's the largest lab in India, that's for sure. And even in all Asia, I think there is not too many labs like that, and maybe 3 labs like that in all Asia. So we are very proud of it. It's in Nasik, and it opened the doors for us of the extra high voltage and ultra high voltage segment, which will be a growing segment in India. We have increased our capacity a little bit worldwide. We have also a new range of product in GIS in high voltage now that we took us 1 year to put the factory up, but it's running. We are delivering more than 40 bays a month now out of this unit, so I think it starts to show in the result a little bit. We also have significantly developed our smart grid activity. I think our automation business grew by 169%, I believe, in the last 2 years, so we have a significant growth here. We also have put new lab. In terms of key order, I will go through some. We got the first order of a Gemini wind farm. Now here is a scoop for you tonight, because I received the consolidation of the order at 5 p.m. tonight Indian time. We booked 129 crores on this order. It's the largest offshore platform in Europe. It's a 242 kV offshore platform connected a 300 megawatt wind farm. And Crompton just won the full project. So today I'm happy to say that we have an additional total order is 400 crores. And that will be the single largest order for Crompton in the electric. And this is really the same business that we used to do. It's transformer that connect wind offshore. And we are replacing HVDC technology that was in competition with, we are providing an AC/AC technology, and we're in competition on the HVDC, which was a much more costly technology. So I think we are very proud to be able to deliver that now. And that makes us the first supplier of those technology now in Europe. PGCIL, I think 765 kV, I know a lot of you talk about that. Now this year we have made 115 765 kV transformer, and I think we just an order this year of 231 crore on that, which makes us not only one of the first company to deliver 765 on the in the Indian market, but also this year one of a major market share with PGCIL. Malaysia, as I said, Southeast Asia is a market focus for us, and Malaysia specifically, we just received more than 300 crores of order from TNB in mobile substations. Spain, I think the smart grid, the smart grid business right now is going pretty fast. We need to turn that into sales and profit. We have some sales, but I think the order is going. We just got a 300 crore this year, and we might have some very good news in front of us this year. I have a lot of expectation on this smart grid, which is a smart meter and concentrator. So this is what we call the low-end level, the distributed automation systems. Industrial, we put a new plant, as I said. The good news is we have a plant. The bad news is that I have to pay for that now. We got a brand new customer. We are really targeting very hard the global OEMs and trying to serve them out of our India operations. We have been very proud this year. As you know, we used to do motors up to 2 megawatt, and now we have increased our capacity to deliver motor up to 15 megawatt. And for the first time, we got a 6 megawatt order in India just for NPCIL, which is the large electrical motor that you use in nuclear power plant. So we have been very happy with that. It's a 12 crore order for one motor, and I think is a first in Crompton. So now Mr. Reina will have to deliver, but should not be any problem. We know how to do motor. India Railway, I think, has been, I would have expecting much more. We made 228 crores, and I think that's also an area where we deliver the full electrical solution for the railway, for the locomotive, on the traction transformer, traction motors, and converter. Saudi Arabia also is start to be I will be in Saudi just Monday, but this weekend. But I think this is an area where we have put some plant, and we have a lot of prospects that I think are helpful. Now, just on the consumer, I think, as you know, this is one area where we have been focusing a lot, and I think the subject was about our reach we are a brand which is for it's an all India brand. So I think this year we have added 11,000 new retailers in the country, which makes us the largest network of retailers in this country. We have now more than 150,000 retailers. The fan business, as I said, increased by 15% for the full year, and the lighting by 18%. And these are two large businesses, and that's the businesses where we control the full supply chain of, and where we create the maximum value for the group. We have been very active in the LED range. I think this is some example about some of the lighting we have done for the railway, but we have a full range there. We have a full expo lab. We also have developed some premium shops and full Crompton shops. We have 5 open in the countries right now. We have 8 coming. We also have revamped a little bit the Crompton brand. There is still a lot of work which is going to happen this year in the subject. Give you an example about the new dashboard. We have put, I think, more than 10,000 dashboards across our distributor in the country, and I think there is more to come. Okay, so I think I'm going to conclude on that. So again, it's a year which is in line with our expectation. I think it has been very difficult to predict what it was. I think I gave a guide. No, I didn't give any guidance. I said we should be 10% growth. I was confident because we have a good backlog, but I knew that we had also a lot of issues on the manufacturing shop floor to solve, and I think we are progressing solving them. We are still not out of the woods. This year, I think the economic environment, if I look at India or non-India, a lot of hope in India, but still when, how much is still very difficult for us, and I will not make any prediction. I think for the growth, we should still be on the good trajectory this year. I think we have a lot of things going on, and we have a rationalization of our manufacturing. International market is going to remain relatively difficult in Europe, I would say, and America, and certainly the growth will come from Middle East and Southeast Asia, where we are now well positioned. And I believe also the last of this year will be a higher export from India. We double our export this year. I think total export is 10%, Madam? More than 10%. Okay, so we get the but it was double than last year. I hope much more, and I think now with the factory we have, we should be able to compete on the global scale with our Indian products. Thank you. I'm going to open the floor to some questions. Thanks. Yes, go ahead. Is there a mic? Mic, please. Mic is.
After the third quarter result, when we had actually interacted with you, we had mentioned and we had asked you that, what do you think, what kind of growth can Crompton at the consolidated level deliver, and also what kind of margins can Crompton get in financial year 50. You had said that please wait for the full year result and then I'll give you a proper number. So can you please share some numbers with us?
I think again I think India is full of surprise. So I'm not sure I was expecting the same environment last time. I think globally we should be able to maintain a double-digit growth next year. So I think it's maybe the 10% range. We have the means to do that. I think there is no issue on that. So I think on profitability, I think we still have some lot of tasks and a lot of hard work to do in the PT side. As you remember, we have transfer my factory in Hungary now is finished, completed. So Thomas Lazar is the head of the PT business, and we were able to complete the factory in January. So now we have a brand new operational factory with the capacity that I announced to you. We still have transferred a lot of projects. I think I still have 2 quarters that might be where we might get surprised. I think that's the one we're working on the PT. So it's difficult for me to say. We work hard. We will try to continue to improve our profitability. We are not happy with the profitability we have, but I think we are going to work hard to increase. But it's difficult for me to give some prediction. We'll be on the good side if India starts soon. I think the real profitability has been impacted by both industrial and consumer on the second and third quarter that didn't deliver in absolute value what we were expecting, so with a mute growth, and that's what really impacted us. So I think if this is solved and it's just a market issue, it's not at all a CG issue. And then on the power transformer side, we'll continue to stabilize this business worldwide, rationalize where we need to rationalize. So if we're on that side, if India starts first, it will be pretty good result. If India starts late, I think today my projection is more restart, significant return on Q4. That's more what I have, I think, and in that case, we'll be on the low side of the side. Yes, madam.
Let me just add to what Laurent just said. I mean, I do recollect Laurent having said that in Q4, businesses outside India would be a bit positive, and I think that's something which the company has delivered. Yeah.
Yeah, I understand operations are spread across the globe. It's really hard to predict. There could be surprises. But you must be working with some targets in mind for financial year 14. That, I need to get to at least, say, 5% or 6% EBIT margins. And there must be a safe range that whatever happens, we'll at least get to 4 or 4.5%. If you could share some of that, it will be very helpful.
For me, we try to improve that the best I can say. We have the result and we try to improve that, and we have a target to improve. We have a target. Yes, the mic is not working. Okay. No, I think we have a target, a plan, a budget, call it as ever you want, which is to deliver better than what we delivered this year. The top line, as I said, will be around 11%, and below we'll try to do better. But pessimistic view, I think we should not be too far from this year. And optimistic view, we could be a little more higher. So that's just what I'm saying. But this year will still be, I think, what we're not a normalized year. Because of our strong dependence on India, which is, again, I remind you, is 50% of our business. And on the other side, I think the slow recovery that we are making on international business, which is still there. So, but if India surprised me by next quarter, maybe I will tell you. First quarter, if I look at what happens in April, it's not booming. I can tell you, April is not a booming month. It was just before election, maybe, I don't know. But so I think that's why I'm very cautious about India right now. It's a little bit unprecise. A lot of hope, but we'll see. Yes.
Can you give more details on your US and the Canadian subsidiary, and as far as the international piece is concerned, what was the contribution from the European subsidiary and how the performance has been post the restructuring, and is it as per your satisfaction?
I think it's in line with what we were expecting. I think since we talk, we have done a little bit. We have done a new restructuring in Canada. As you know, we have restructured the plant Canada. It's completed. I think we done that on April 29. We removed 20% of the workforce. We refocused the factory. We changed the management, and I think we have We have put actions that should stabilize the situation. In Europe, we also made the restructuring in our system activity. In the US, we have been almost downsizing the activity by more than half. So I think we have also stabilized the situation. In Europe, I think Belgium has been progressing as expected. Our restructuring were completed in December 2013. So I think now it's progressing again as expected. The system business is going very well. And in Hungary, the plant has been progressing. I think our volume of production has never been so high. It's an all-time record this year. But the factory, as I said, has been completed in January 2014, and it's still not in a stable condition. For those who know the power transformer, we always say 1 year to build, 1 year to stabilize. So we'll see. Try to do maybe faster. But I think we are still in the gray zone. And on top of that, I still have 2 quarters of backlog of project that was transferred that we need to go through the plant. So it puts a lot of uncertainty. We have recruited a lot of new people now in the factory. We are training. So that was the major things, I think in all the international operations. Yes?
Can you share some numbers in terms of losses from the US, the Canadian and the European subsidiary in terms of how profitable they were in terms of margins compared to last year?
I can talk about the Canadian subsidiary, as we said in the earlier call also. We are running a run rate of around $2.5 million a quarter, and that's where we are at this point of time. As Laurent said, we have taken a lot of steps beginning this year, and they will start showing up hopefully in the numbers beginning first quarter itself. So we will see some improvement definitely from the first quarter onwards. Our run rate remains the same till March.
And the European subsidiaries, both of them?
Things are looking much better. Okay. The advantages of restructuring in terms of the personal costs are definitely showing up in the numbers. As you would see the numbers, they're all in there. The saving is very much in there. As Laurent said, the stabilization of a plant like Hungary, which takes 1 year to build and 1 year to stabilize, that takes a little bit of time, but otherwise I think we're on the right track.
Just last question from my end. As far as the orders for the European subsidiaries are concerned, are there any orders where there could be further litigations on account of delays and delay in stabilization of the European factories, or that is behind us?
The answer is we might have. There is none identified, but as I told you, we still have 2 quarters of backlog to swallow in Hungary, which are old projects that also we go through a lot of negotiations to get those things done. So we are not immune from surprise. In Hungary, I think that Hungary is where this could come because of the historical. But I don't know forecast. Okay. Other question? Yes. I think the mic needs to be turned on.
Could you give us the breakup of the order inflow and order backlog, various division wise? If you can also break up on the system and the products basis.
Yeah.
Sure.
Right. You can take down the order intake details. Order intake for Q4, first I'll give you the India numbers. Power Systems has got a figure of 552 crores for the quarter. Industrial Systems at 419 crores. Total order intake India in Q4 is 972 crores. Sorry. In terms of non-India, Power Systems order intake is 1,429 crores. Industrial Systems at 88 crores. Total order intake for Q4 non-India is 1,517 crores. For CG as a whole, Power Systems order intake for Q4 is 1,981 crores. For Industrial Systems at 508 crores. Total order intake for CG for the quarter is at 2,489 crores. Coming to the order book number, we have a total order book. As you know, we do not report order intake or order book for consumer business and a lot of our industrial business, which is distribution business. So the total order book as on date is 9,293 crores. And you can take the breakup. Power Systems India, 3,108 crores. Industrial Systems India, 477 crores. Total India order book as on date is 3,585 crores. Non-India Power, 5,530 crores. Non-India Industrial at 178 crores. Total non-India order book as on date is 5,708 crores. Total Power Systems order is at 8,638 crores. Industrial at 655 crores. And total order book of CG as on date, as I said, is 9,293 crores.
Systems orders also, if you can. Order book.
I'll just give you the order book position of systems. We have a total order book as on date of 2,082 crores.
If you can break up between India
Sorry?
and non-India. India and non-India.
Okay. The order book of systems and solutions is at 752 crores for India and 1,330 crores for non-India. So total is 2,082.
If you can elaborate more on the industry part, you said the new factory has started. And when do you expect the revenues to start kicking in? The new HT motors in the Bhopal. You have also been highlighting that a bulk of the new expansion in the HT could go in the international market, as India, you don't have such large addressable markets. If you can throw more light, new customer acquisition, if you have got these motors accredited with the customers.
Sure. Yeah, first of all, two factories which we spoke about last time. One was HT motors, second is drives. So the drive one has been 90% loaded from June onwards. And our target is that in second quarter it should be 100% loaded. And 50% of these orders are coming from Europe and 50% is coming from India. That was the original plan, if you remember, that we said this factory will also do. Because this is identical technology which we make in Sweden, modified and customized for India. So as far as the drives is concerned, it is almost fully loaded. HT motor is the large one because our dependence is more on India, surely. And it is power, cement, water and steel. These are the major ones, other than the synchronous generators. Now, synchronous generators, we have a good number of orders, up to 5 to 7 MVA. I'm talking equivalent MVA. You know, there could be different polarities because of the hydro business. So, I can say around 60 to 65%, stretch up to 70 in some months it is fully loaded. But our target is now, as we go by September, October, when we expect that market will pick up. And we think this HT motor factory also will get fully loaded. You have to remember that the prices have substantially come down in India, you know, because of the market has degrown for HT motors for 35% last year. This year, the EMA figure just today received is minus 26%, over and above minus 35. So there will be always the impact. In terms of quantity, it will be fully loaded. There will be some impact on the top line. Coming to the exports, we have already, I think, this quarter, first quarter onwards, the exports are showing a very good trend. And we have sort of taken some breakthroughs in Middle East and few in Africa. And these are the two, it appears to us that we can do substantially better at a reasonable and good price. And that is where we are focusing. As we go along, I think a substantial portion of this plant, HT, small, old and the new, both will go from to these markets. We have applied for many customers' approval. You know, it takes very long time. Almost it takes 8 to 12 months. Application have been moved. Some trial orders have come. There are certain regions where made in Europe only is required, so Hungary is getting loaded, and wherever from India customers are accepting the goods, we have already started. Saudi is one market, you can say that, from Dubai office, we have already started office in Dubai, now regular inquiries have coming. We are quite hopeful that at least 20-30% of the load of this new factory should come as we go along by year end. 20% at least we can say that we should come from the international market.
If I look at the other income, specifically the international business has seen a significant jump. So if you can highlight what is that more recurring in nature, or it's something one time?
Sorry, could you please repeat the question? I couldn't get it.
Other income in the international
Other
business,
income.
consolidated minus standalone, if I see there is a significant jump in the other income, if you could, what is it and is it recurring or one time? 58 odd crores.
Sure. We have an other income of approximately 50 crores in the quarter versus if you look at Q3 this year, it was approximately 16 crores. Okay. In terms of other income in overseas subs, we get grants for research and development from various countries. That's one of the items that we get. And there's also a fair bit of foreign currency gains in the overseas subsidiaries. So that's helped the other income.
If you can break up foreign exchange currency and the grants.
I'll give you approximate breakup. The foreign currency gains would be approximately 22 crores. And the gains and the grant from the government would be approximately 28 crores.
So this comes only in the fourth quarter, not through the year.
No, it has also come through the year. Earlier also it has come.
The last bit, tax rate in the standalone business has jumped from 24-25% to 30% plus.
Sure.
So if you can explain more about it.
Firstly, if you look at our tax rate, we are at close to 25% for the whole year. But you're right. Q4 tax rate was higher. As I guess I had explained this earlier in last year's call as well, that we have a certain process for research and development costs. And as you know, in India, research and development costs provide us almost 200% in terms of the tax shelters. And we do keep incurring research and development costs, and we have a gate process by which only when we cross a certain threshold, we recognize the R&D costs. Now, most of the time what happens is that based on the planning for R&D, you take a certain assumption into your tax calculations and you provide based on that. And but there could be many projects which do not go through our gate in terms of a basic standard of acceptance, so they fall off, and then we have to unwind that particular R&D shelter. So that's why the tax rates jump. But overall, on an annual basis, if you see versus last year, we are at the same rate, 25%.
So next year also we should expect a similar?
I would be comfortable taking a 25% tax rate, yes.
Okay, thank you.
Thank you.
Hello.
Hi.
Sir, could you give the overseas other expenses breakup, details of that? That 962 crore.
Yeah.
And what do you see, how do you expect the different parts of this cost will emerge in near future?
Okay, the other expenses for the quarter consolidated, if I guess you're looking at, is 542 crores versus 440 crores in December quarter.
So for full year, this is 962 overseas other expenses.
Yeah, the other expenses overseas has gone up. Couple of reasons. One is the top line growth. If you see the growth has been exceptionally good. If you want the growth number, I'll give you. The growth in the current quarter is at 28.1%. Overseas business. So there's obviously will be higher freight element, higher packing element, higher warranty costs and those kinds of things. So it's basically operational cost which has gone up. Yes.
Mike here, front.
So, in the previous analyst meets and interactions, you've been talking about exports from India being a thrust area. What were the total exports in power segment standalone from India, and what is the growth year-on-year that you saw there?
Madhav is going to give you that.
Yeah, sure. I'll give you the.
And if you could also touch upon the outlook for FY15.
Outlook for FY15. You want to give the outlook? Okay.
The exports from India for the current year are at 978 crores. This represents a 13% growth over the last year.
And this is mostly power segment?
Largely power, yes.
Okay.
Now the outlook, I think we hope that Anil is going to export a lot next year. I would say we have, you remember Dubai office was open last year. Me and Madhav were going to spend a weekend down there, but we have more than 20 people down there now doing on the sales side. We have the service. We got $550 million of quotation made now. So that's my backlog of quotation made just for Middle East. So something will get out of that. We're expecting to have more. So I think this, when you get into a new territory, usually you never get an order the first time. You get one, second, but now people see that we're going to stay, and we have good products. So I'm sure it will come.
Okay. My second question is on the consumer segment. Quarter after quarter, we've been seeing that fans and lighting have been growing, fairly well. I mean, excluding this quarter for the full year. So, what exactly is happening in appliances? What is your focus? Why is it dragging down growth?
Yeah, I'm going to give that to Ash, but just I think for appliances, our supply chain, we are a pure trader. So we buy products for different regions and then we trade, which is not the case for fan and for fan and lighting, which give us much more flexibility, both on the supply chain itself, so we can react to demand faster, but also give us much more room also to improve the cost, the margin, the price, and adapt the market. But Ash.
No, I think it's just a supply chain that we are sorting out this year, and we hope to do a whole lot better this year.
So the last question about 2 years back, you had laid out a strategic plan to improve margins, I think by 300 basis points then, and since then, of course, with the restructuring that has happened, we have seen the kind of margins we have. So on a normalized basis, again, you said that FY15 will not be a normalized year. So in a normalized year, how do you see margins panning out for the overseas power segment? And, maybe, whatever you want to add out there.
Take my joker here. I can, as I said, I cannot give provision on that. It's first too early for us. It's also look at what happened in the market now, in international market. You have seen the GE takeover of the Alstom bid. There is a consolidation going on. There is a lot of things happening in this industry. So I think it's a little bit difficult to see ourselves in a normalized year. I think next year will not be a normalized year. So I think let's see. Sorry, I'm just... Okay, other questions. Sorry. Other question? Yeah.
Hi, sir. Total capex that you have incurred this year, breakup between India and overseas.
Yeah, capex. Okay, while you are looking, I think we'll take your question. There is another question that's been asked, is why we had a share loss in associate, 17.2 crore share loss that we published. Just on this question coming from Vivek, we have a participation, a 49% equity into a company in Saudi Arabia called SPTC. This company is a brand new factory. We inaugurated that 6 months ago. Doing power transformer is going to be one of the largest factory of Crompton. Again, we have a minority interest. And this factory is still not ready. They are finalizing, but I think it is going to start to produce and to book order this year. And we recognize the extra cost, in fact, that was required. We had roughly 9 months delay in the startup of the plant. So that was the reason of this share loss.
To answer your question on the capex, the total capex net of the foreign exchange impact is 295 crores for CG as a whole, out of which India is approximately 130 crores.
And second question is on the plant capacity utilization, especially on the power side. If you can give some color, how is it in Bhopal, in other regions in India and Hungary, Belgium. And related question would be, what would be the capex that you would do over the next 2 to 3 years, especially with regard to the plan that you had for Baroda factory? How is it shaping up?
Well, which plant?
The Baroda.
Baroda, okay.
And on the capacity utilization at various plants at this point in time?
And capacity utilization of what? Of our current plant in India?
The power plants in India and overseas.
Okay, so that I will let, it's an easy answer, so I will let TGK to answer that, and then he can talk to you about Baroda also.
The capacity utilization of India power plants. So let me start with, let's say, T1 division, which is the largest power transformer unit what we have. Our capacity is 26,000 installed, and we have used the capacity of 23,300. So I would say it will be in percentage 23,300, which will be quite 80-85%. In terms of T3, our capacity is 14,000, and we have practically fully utilized it last year. Little shortfall in Mumbai plant was because in initial Q1 we had a small fire and that disrupted our production, but that we recovered it in subsequent quarters. In terms of switchgear facilities, in fact, in EHV, our capacity utilization has been 90% plus, and in medium voltage, we had to enhance the capacity by building an additional plant for ring main units with our joint venture partner. So the capacity has been enhanced, and that capacity also has been fully used.
And overseas, sir?
In overseas, capacity utilization primarily in Belgium, although Belgium did a lot of improvements in terms of the performance and all that, we did had a Murphy in the beginning of the quarter in terms of fire in the motor generator set that little gave us a setback in terms of production. So against the capacity of 7,500, we have used 5,500. Hungary, as Mr. Laura said, that we installed the additional capacity in January, and now it's in the process of stabilizing. In spite of that, 10,000 capacity, which actually became by, let's say, 31st March, we have utilized 7,000 MV. So, 70%.
Okay. So, with more orders that could come through in the next 1 or 2 years, what would be the capacity expansion like, and how easy would it be? What would be the greenfield expansion, brownfield expansion, and what would be the quantum that you would spend on these expansion over the next 2 to 3 years?
Not clear to me question.
The question is that, say if we have more orders in 15 and 16 onwards,
right.
How do we expand our capacity? Will it be greenfield? Will it be brownfield? Where would it be majorly? Will it be in Bhopal, or we'll start a new plant in Baroda? When will it happen? Because, we might project huge amount of orders coming through. Nonetheless, if you don't have capacity, it becomes difficult to really execute those.
If you have seen the presentation, what was made, we implemented a capacity expansion program for T3 in Bhopal, and with that, I think we have jumped to 14,000. In Indonesia, also we have expanded the capacity, and Hungary. These are the 3 PT plants where the expansion of capacity has happened, considering the future growth. It will take its own time for stabilization. Coming to India side, T3 I have talked about. In terms of T1, we have reached to a maximum capacity what we can. And any expansion, any improvement in capacity will be through improvements in productivity and utilization of the equipments, critical constraint equipment. So that will be the internal improvement program or business transformation program. In terms of looking larger picture than just 1 year or 6 months, I think our intention to really go for a breakthrough capacity installation in Baroda will be on our card.
So the final question would be on the absolute capex that you do in 15-16 and India and overseas breakup if possible.
The absolute amount of capex for 14-15, I guess that's what you meant, would be approximately 275 crores to 295 crores in the range, which is equal to our depreciation and amortization for the year.
Okay.
Not factoring in any investment in Baroda that we might do.
Okay. And coming back to the overseas side, I think the question that most of us over here have, and I think some people have tried asking this, is in a normalized kind of a scenario. Is things really looking fine in case, the overall environment, macro environment is where it is right now, or it improves gradually, even in Europe and US? Do we see a sharp improvement in our financials because restructuring is done? And where could be the glitch which could come? In case you can, qualitatively, will there be any glitches from here on, apart from, say, internal glitches? Could there be any external issues which could crop up? And is competition increasing, which is making you wary of giving any formal guidance? Thank you so much.
Sorry for the understanding. So I couldn't hear very well. But so the question is about the evolution of the external environment in Europe and US. Is it correct? I cannot hear. Sorry.
Assuming that the macroeconomic environment remains where it is right now, or it improves, especially in Europe and US, we have overseas plants, we have already done our restructuring. The question which is there in most of our minds is, a normalized year, what is the kind of margin which Crompton Greaves could do? Based on the current competitive...
There is already the question, I think I already answered. So.
Based on the current competitive scenario, based on the overall macroeconomic outlook, and assuming it's a very normal year.
Come on. You are a good analyst, so I'm sure you will make all the assumptions you want. But I try to make the same exercise than you do. I think if you look at Crompton, if there is good news in India, we will benefit a lot, because we have a lot of capacity available in the motor side. In the power side, I think, as you have seen, we are fully utilized, so I think there is not too much option. We are pushing a little bit the wall in Bhopal. Our most major investment, if we finalize and decide, and today we are in a good mood to decide, will be Baroda. The question is what size. We have put a very large land. We have 125 acres of land now. So I think we are looking at what is the best option for us in terms of overall capacity, and we will need that plant anyway for the years to come. So there is no doubt in the mind of the company and of the board. But it will not be online now. It will take a little bit, few years before, at least 2 years, to put it online. Consumer can benefit a lot also on the situation. So we could have a large rebound in India and we can respond immediately. We have the capacity, we have the plant, we have the channels. In Europe, we can also reply very well to if there is some growth now, especially with our plant in Eastern Europe, which is now a flagship, which I think I've been through several. So maybe not this year, but beginning of next year will be to respond, as again is the stabilization and get a significant increase.
Yes.
Sir, Crompton had seen one of the best 14% EBITDA margin in 2010, 2011 with a top line of 10,000 crore. Do you see any possibility of going back to such margin level, EBITDA margin level in next 3 years, 3 to 4 years time?
Same answer. No answer. I answer. Yeah, thank you to asking on that angle, but I already answered that. Any other question?
Yeah, hi sir. Can you give the details on 17 crore loss at associate levels during this quarter?
Yeah, the 17 crores on share loss. This is the share loss. I think that I tried to answer, so maybe Madhav is going to answer again. Again, this is a participation in a joint venture we have in Saudi Arabia with SPTC. We own 49% of this company. And this SPTC is a major manufacturer of power transformer in Saudi Arabia. Saudi Arabia is a very large market. It's a very large factory. And unfortunately, the factory is still not fully operational. It's, if you see it, the factory is finished, but we are finalizing, and it's not producing. As the factory is not producing, we have incurred the GV incurred some losses, and we had to recognize that in our shares. Madhav, you want to technically? Okay.
And you said that you are surprised by the slowdown in domestic market, particularly in almost all the segments. So what is your current reading going forward for the slowdown?
Sorry?
Domestic market, if you look at almost all the segments,
domestic market, I think consumer. I think, as you know, we had a 20% growth average last year. We had a pretty good first quarter. We had a pretty good second quarter. And suddenly on the third, we could slow down. And on the fourth, the slowdown continued. So we make 0% growth. That's the consumer side. Despite that, we have increased our reach. We have the same products more or less. So I think it was a little bit of, that's what we call the slowdown, which maybe is the inflation, consumption. I think it seems that it has been shared on the consumer side. I think we are not the only one to have been suffering from this slowdown. The second big slowdown we said is on the industrial investment, the capex for the industrial, which has been heavily impacted our large motor business and also the railway business. So lack of investment in the past quarter. But I think, so that's what really have impacted our India business.
Thank you.
Good evening, sir.
Yes. Yeah, good evening. Sorry.
I have a question relating to your overseas business.
Yeah.
There is, if I am not wrong, there is 500 crore goodwill sitting in your overseas books against ZIV acquisition. So given that ZIV has not delivered results at par with your initial expectations, do you see significant risk of impairment of that goodwill?
Okay. ZIV, I think we got in automation, just I think last quarter, as I said, we had 159% growth, 59% of the last quarter. You know, when we make an acquisition, especially in a new field, you don't judge the validity of the acquisition on 1 year. When you count the value of a company, you don't look also on 1 year. We have a fantastic technology. We are growing pretty fast right now. I think there is very few companies. We have more than $10.5 billion of projects right now under which we are around the world. I don't know if you realize the number, which will not get all that, otherwise it will be a revolution for us. But I think this is the largest potential of business right now we are working on. And we have been winning some interesting projects in Paraguay, Brazil, Portugal, Spain. We are bidding for France right now, Poland, Lebanon. We have the new unit now in India, in Bangalore. We have, I think, 5 or 6 large projects in India right now going on. So I think this has been the fastest growing segment in all CG. So let's see. I'm not. I'm going to let Madhav answer for the impairment. But impairment is not on a one-year result. That's what I try to explain to our accountant. But.
And just to add, based on what Laurent said, based on the technology that we have and based on the opportunity in the markets around the globe and the visibility that we have in terms of the opportunities, we do not believe that we have any significant risk of impairment in the near future.
And sir, can you give me growth in or order inflow in overseas business in local currency?
I'll give you the total order intake number without the effect of currency. The effect of currency has been 237 crores in this quarter. So the figure of order intake without the currency effect for the quarter is 1,281 crores.
Out of this 1,429 crores,
Out of 1,517 crores, which was the total order intake for non-India for the quarter, that is power and industrial put together. So if you remove the currency effect, the order intake is 1,281 crores.
And again, it's a growth number.
Looking at compared to Q4 last year, no, there has not been any growth.
And this 28% growth in sales you are talking about, it's in local currency or Indian currency?
This is in the INR that we report.
And in euro it would be?
This would be approximately 15 to 16%.
So that justifies the increase in the other expenses somebody was talking about?
That's correct, but you also, when you calculate the increase in other expense, you have to remove the currency effect from there also.
No, if you look at sales ratio.
That's correct. So if you take the sales in euro terms, then you also will have to remove put the expenses in euro terms and see the numbers. So based on the sales growth, it justifies the increase in the freight costs and packing and warranties and other related costs.
Okay. And sir, one last question. What is the status of loan refinancing in your overseas business?
I'm not sure why. I didn't get your question.
No, I think the loan for ZIV is due for a repayment. So would you go for refinancing or you will finance that loan from your parent in India? How would it would be?
Okay, based on the information that I have, based on the loans that we have on our balance sheet, the loan for repayment for ZIV is not due in this year, not in 14-15. And anyway, I do not see any challenge in refinancing the debt.
Okay. There's a question for JG. Two questions. One is distribution in India. As a segment, we have seen that CapEx has lagged since many years. So if you can throw light, are you actually seeing SEBs coming in inquiring to you that the distribution capex you are seeing, it can jump up? And one of your competitors in the last analyst meet made a statement that if distribution capex does pick up, everybody in India will be falling short of capacity because practically there has been no capacity addition in the last decade or so.
If I have to answer with the data, if I take the medium voltage as a segment of business and product which caters to the distribution range in India primarily, and in distribution product range which comprises of medium voltage circuit breaker and switchgear and ringman units and all that, if I have seen the growth in order input is 71%. So that's an indication that the distribution network in India is being focused by the utilities and the DISCOMs, and certainly it is looking up. This is out of all the electrical products, I have seen that distribution is showing a recovery and quite large in terms of that. And I think with the new policies which might come in after the change, whatever has happened, I'm more hopeful that, and I will support that statement that capacity will be less than, will not be able to cope up with the demand.
Second question on the consumer. We've seen slowdown in this quarter. How do you see, was there an aberration because you had earlier said you had bulk sales to which were not remunerative and you will not be focusing on them, and we've seen margin expansion even though top line growth had slowed down. Are you focusing more on margins as against top line for next year?
No, so we are focused on top line. We are focused on increasing our market share. And like I mentioned earlier, in appliances there was a supply chain constraint, which we are fixing this year. So we should not have the same kind of issues. And overall, I see improved consumer sentiment. And as Laura had mentioned earlier, the lighting and the fans business, the two of our biggest businesses, they have been growing. So they had a very nice, healthy growth and also margin expansion. So overall, I just see a positive outlook for the coming year.
So the growth should be in the 15 to 20% range?
Sorry?
Should the growth in FY15 in the 15 to 20% range or in the single digit?
We are certainly hoping for exciting growth this year.
Thank you.
Okay, maybe one last question. No one? Okay. Thank you very much.
Thank you.
Thank you.